We are seeing lower inflation, which is why I'm wondering how you're thinking about the gas price move. Big jump in the month of August. Crude is back above $90 per barrel. The Saudis are extending the production cuts through the end of the year. Are you looking at taking any action on this front?
Well, the president wants to make sure that gas prices remain affordable for Americans. Americans care a great deal about the price of gas. They're still down $1.20 off their highs last summer, although they have gone up recently. China's ended its pandemic lockdowns, and although Chinese growth is slower than expected, China coming back online, and the continuation of the production cuts by Saudi Arabia has lifted oil prices somewhat. We're monitoring this situation very closely. The president has taken action over the last year. Certainly, the releases of oil from the Strategic Petroleum Reserve have been important in holding down oil prices, and we'll continue to monitor that closely.
I just wonder how much space you have and what you would potentially do because we are losing progress on this front with oil prices rising.
Well, my expectation is that they will stabilize, but we'll just keep an eye on it.
Another headwind that people are looking at is the end of the moratorium on student loans. So folks are going to have to start paying October 1st, and we're wondering what impact that could have on consumer spending. It's a key demographic cohort.
Well, for some families, I think it will impact their spending. The president has offered up the Education Department a new set of student loan plans that should make these payments more affordable and will be widely available. But yes, they will start up again, and it could make a difference.
You mean in consumer spending and
it could make some difference.
GDP as a risk factor?
I don't know how large that is, but it's something to watch.
The other thing we're watching, of course, is the government and a potential shutdown. Again, 2 weeks to go. The Republicans have this short-term funding bill out, not clear whether they have their party's full support or whether it would go anywhere in the Senate. Are you anticipating a shutdown?
There's absolutely no reason for a shutdown. The Senate Republicans, the Democrats in both the House and Senate stand ready to enact appropriations bills that are consistent with the bipartisan agreement that was reached to lift the debt ceiling. And we want to see Congress pass legislation that will create appropriations or a continuing resolution. There's absolutely no reason for a shutdown, and we want Congress to do its work of funding the government and keeping it open.
But time is running out, as you know. Is that could that have a potential economic impact if we see a shutdown?
It could have some impact, but there is no reason for it to occur, and we want Congress to stay focused. We've got a good, strong economy, as we just discussed, and creating something that situation that could cause a loss of momentum is something we don't need as a risk at this point.
Some people think the reason we have such a good, strong economy in the face of all these interest rate hikes is all the fiscal spending we have seen. The Infrastructure Act, American Rescue Plan, the Inflation Reduction Act, the CHIPS Act, all of that stimulus working against what Fed Chair Powell has been doing to try to slow the economy to fight inflation. Do you agree?
Well, the Infrastructure Act, the CHIPS Act, the Inflation Reduction Act, these are all long-term spending measures that will really boost the growth of the economy and add to its job-creating capacity long-term. And many of those bills have been paid for, and so I wouldn't regard it as net stimulus. I think the American Rescue Plan, which was stimulus, shielded families that could have been very badly impacted by the pandemic. It kept a roof over their heads and food on the table, and it ensured the fastest recovery of any economy. The United States is doing better than any economy around the world, and we've not seen the long-term job loss or scarring that easily could have occurred. The bipartisan agreement to raise the debt ceiling involved $1 trillion of deficit reduction. President Biden is committed to keeping the economy on a fiscally sustainable course, and he proposed a budget with $3 trillion of deficit reduction over the next decade. So we are both investing in the long-term health of the U.S. economy to boost growth and create good jobs in clean energy, in semiconductors, to rebuild our infrastructure, to make this economy more productive. And I think that's a strategy that's really working, investing in American and Americans.